Increased inventory is leading to new incentives for car buyers, but is now the time to buy if you bought a vehicle during the pandemic. Thanks for staying with us at 5:30. I'm Angela Ann.
And I'm Yolanda Harris. Let's get to Consumer 10's Clay Gordon. He has the staggering report on just how many Americans are losing money on their trade-ins.
Hello everyone, welcome back to the channel. Now, a growing number of Americans and Canadians are finding themselves car poor due to rising auto loan debt. Recent reports from Edmunds reveal that nearly 1 in 4 people or 1 in 5 with a car loan owe more on their vehicle than it's actually worth. And get this, the average upside down balance is a record high of around $6,400. Even more alarming, 22.1% of those with negative $10,000 or more on their car. But first off, the claim that nearly 24.2% of trade-ins have negative equity up from last year is accurate based on the data also from Edmunds you're seeing on the screen right now. So today's feature video is from WBNS 10 TV, fair use. So and if you're new to the channel, please subscribe, and if you have to leave before the end, I really appreciate if you hit that thumbs up button. The algorithm will love you for it. So let's get into our feature video.
Increased inventory is leading to new incentives for car buyers, but is now the time to buy if you bought a vehicle during the pandemic. Thanks for staying with us at 5:30. I'm Angela Ann.
And I'm Yolanda Harris. Let's get to Consumer 10's Clay Gordon. He has the staggering report on just how many Americans are losing money on their trade-ins.
Trading in your vehicle for that new car smell. You might want to park that thought. New data showing more Americans are underwater on their car loans. And it's not just for luxury vehicles, which means you owe more on your car than it's actually worth.
If you have paid off your loan and you start looking at what is your vehicle worth and you've only made like 3 years of payments, odds are with today's market going back to normal, used values going down, new cars having incentives, it's making it so that your used vehicle's trading value has gone down.
Edmunds reports 24.2% of trade-ins have negative equity still when the owner is looking to buy a new car, up nearly 6% from the same time last year. The average owed is at an all-time high, about $6,400. More than 20% of Americans owe much more than the average, a lot more.
We have people who have $10,000 or $15,000 worth of negative equity. You get to buy something that's like 60 or 70K for a bank to even allow you to roll over that debt.
There are ways to add value to your car. Keep up with regular maintenance. Wash your vehicle to protect the paint and prevent rust. And try to keep the mileage.
But they're only telling them that no, because the pandemic created a surge in used car values. But now, with the market stabilizing, prices should be falling. And people who purchased during the height of inflated values are now stuck with the loans that exceed the vehicle's actual worth. This is a clear case of the market correcting itself, as I lamented months ago in previous videos. Because during the pandemic, the supply chain issues, factory shutdowns, and higher demand for personal vehicles inflated prices across the entire market. And now that the new car inventories are back up and in oversupplies, incentives are in play right now, and used car prices are coming back to the pre-pandemic levels. That's why people who bought cars at the peak are experiencing such sharp drops in value when trying to trade them in. Now, the $6,400 average negative equity you're seeing the chart here, combined with some individuals owing $10,000 to $15,000 more than their car's worth, shows how the market has turned on those buyers. The report also touches on the dilemma. Do you keep your car longer, pay off more of the loan, or take a hit and roll that negative equity into another loan? Now, given the current interest rates, it's more financially prudent to keep your vehicle longer and let the payments catch up to the car's depreciating value. Now look at what people are actually getting themselves into. I have to take the sound off because the music is playing in the background. I don't know, I might get dinged by YouTube for copyright. But look at this, 0 down, $5.99 a month for 27 months. This is actually wild, and these are called slam deals. The fact is, some used car dealers attract customers with taglines like good credit, bad credit, no SIN or social security number. SIN is what we use here in Canada. If you're new to the country, we can help all. If the bank doesn't approve you, we will. And that's how they actually get you. 2 to 3 years in and you're up to your neck in debt, then the reaper man actually makes his bread from you going into such a bad deal. Let's continue with the feature video.
You kind of see this interesting relationship between age and miles where one matters more than the other. And typically it's miles more than age.
If you can, jury suggests keeping your car as long as you can.
Is it a $6,500 problem? Or is this something where you're like, look, I can just drive this car another year, another 2 years, let my payments catch up with my vehicle's value. And that is absolutely the best way to get ahead of that.
If you need a car now, research a vehicle with a high resale value so your next ride is a good buy. For Consumer 10, I'm Clay Gordon.
Good to know, Clay. Thank you. Now, we all know it. Car insurance rates are high right now, but why is that?
Let me just interject here now, because as for maintaining the car, you alluded to that, to retain the value. Things like regular maintenance, keeping the mileage low and protecting the exterior do actually help, but they're not going to completely offset the sharp drop in the resale values. And we're seeing basically that in the market now. The advice is to research vehicles with high resale value is also solid, though it's worth noting that even traditionally strong models like Toyota and Honda are experiencing a drop in resale values as the market resets itself. The advice to research vehicles with high resale value is actually solid, though it's worth noting that even traditionally strong models like Toyota and Honda are experiencing a drop in resale values as the market resets itself. Let's continue.
Site NerdWallet breaks it down, saying things like your personal characteristics, your driving record, and your choice of insurance can all contribute to higher rates. Now, if you're looking to save, NerdWallet experts say don't be afraid to ask for discounts. Also, revisit quotes if your driving record improves, and rethink the car you want. Safer and newer models can actually save you some dollars.
Now, the advice on insurance rate is also a critical component to consider, especially with inflation affecting every aspect of car ownership. Sites like NerdWallet's tips on reevaluating coverage and getting the discounts are valid, but the underlying issue is that insurance companies are raising premiums due to increased repair costs, higher claims, and more expensive replacement parts, especially now with electric vehicles. And rethinking vehicle choices with safety and resale in mind is a smart move in this climate, but the broader issue of negative equity is a hard pill to swallow for many consumers. I, for one, is probably the only content creator and auto consultant right now who's been telling people only to buy a car with disposable income in today's financial market. Today's economic uncertainty will test their earning potential, much less a depreciating asset such as a car. Now, the only other specialists I can think about outrightly are people like Dave Ramsey and Ramit Sethi, who comes to mind, who advise people on debt reduction rather than trying to keep up with the Joneses. Now, in essence, the report does a good job highlighting the situation, but it underscores the importance of not buying vehicles when the market is inflating. Painful lesson for the pandemic era buyers. As the market normalizes, patience and planning is the key to avoid financial pitfalls. As usual, please let me know your thoughts in the comments below. Remember to grab a copy of my ebook, The Party Manager Guide. Please smash that like button on your way out. It will only take you 1.5 seconds to do so. Until next time.